Oh, hello. Triggered a very bullish buy that just updated on our market sentiment. It was at a light buy the past 2 days, I believe, actually, but just went into the very bullish buy mode. So Monday is going to be interesting to see what happens, as we know we're still pulling back and still declining, and we saw some big movements down on some stocks, especially right at the end. There in the last 10, 15 minutes, we saw the last hour, just on our first example for Pavel, we saw COUP go from 130.25 down to 128.70 and closed at 127.30. And Pavel says, can we go over the very bullish buy indicator? Yeah, it's the same thing we've always talked about, Pavel, with the market sentiment tool. There's 13 broad-based indicators. Ernie spent, several months going through about 80, 90 different indicators from different sources, some that, the Wall Street Journal like to use, some that Forbes likes to use, some that Investors Business Daily likes to use. And he went through all of them and went back in time and watched when the big market movements occurred. And what he was looking for in those cases is when certain things reached a certain lower limit or upper limit on a consistent basis, it usually gave a warning sign, a fairly good pre-warning sign of a market move down or a market move up. Right now, 8 of the 13 indicators have gone into bullish mode. So the total number, which is very bullish buy, Pavel, that's because this number of bullish indicators that went into the bullish has gone above 6 or gone above 7. I don't remember the exact one, which it is, but now that it's at 8, and there's no bearish indicators right now with the recent pullback we've had in the last 5 or 6 days, then that's what we're looking at there as a very bullish buy. Does this mean Monday is going to be bullish? No. Does this mean Tuesday we're going to suddenly go up 4 or 5%? No. In that case, that's not what I'm saying. What I'm saying is that this is usually starts to indicate that a switch is happening with these indicators. And what are these indicators? Well, they're all listed right here, of course. The put-call volume ratio across the market. That one actually hasn't gone bullish yet. It's still in neutral mode. Number of SPX days that are up. We've been down about 5, 6 days in a row. So that's gone into the bullish fence there. Now, what does that mean? Well, I told you that Ernie essentially looked at past histories, going through the market with these different indicators. And here, when you go into the details, you can see the distribution. SPX, of course, has been down 4 days. Thought it was 5, but I guess it's 4 days. What this is showing you is over time of about 14 or 15 years of history. These are the plot points, the distribution of the number of times SPX has been down 4 days in a row, 5 days in a row. You see, it doesn't normally go down this far. Usually when it gets to here, it starts moving back in this direction, naturally. You also don't see it move up necessarily 5, 6, or 7 days in a row. So when it gets up here, it wants to go back and gets pushed back to the normal. Now, that's just by itself. That doesn't mean that every time I see SPY or SPX drop 4 or 5 days in a row, I'm expecting the next day to be bullish. That's why there's 13 indicators. It's not just based on one. And of course, we can see the history as well. If you go versus SPX, which is kind of silly to do here. Oh, shoot. I apologize. Oh, there it is. I'm sorry. So it's all the way back beyond 2008. That's the 13 years I was referencing. Okay. So you can go back to 2008, take a look at what it was in 2009. Yeah, this isn't the best indicator to use. We look at called volume ratio, which I mentioned again hasn't gone into bearish strategy yet, still holding in neutral. But what you're seeing here is the put-call volume ratio versus the price in blue on SPX. And you see starting to move up very quickly. The put-call volume ratio is moving up as SPX is dropping. And of course, then we can look at what happened in 2008. What happened in 2009 when the market started to move back up? Put-call volume ratio was fluctuating, but there were ups and downs. How about 2020? That makes sense, doesn't it? Put-call volume ratio took off in February to March. I'm sorry, it started to increase there right around March of 2020. And then by April, it started to drop really back down, went really, really low as the market started to recover in 2020. Big jump there. How about December? See a big jump there in the put-call ratio, and then it came back down, but starting to move back up again, is which we'd expect. All right, so the gap over the SMA 20, the distance gap, percentage gap over the SMA 20, that's gone into the bullish phase. The percentage of stocks over their 20-day moving average is probably very low right now. Let's take a look. 15%. And I believe this is just all optionable stocks. I'll have to check with Ernie on that, but I think it's just all optional stocks. Only 15% of all optionable stocks are currently above their 20-day moving average. We know that. We've been watching the markets, but that's a low number, isn't it, there? And again, you can see by the distribution that once it hits that level, that the percentage of stocks being over the 20-day moving average drops into this range. It very infrequently continues down, which usually means something needs to go back. Something usually happens to push that back. Again, am I saying it's going to happen on Monday? Am I saying it's going to happen on Tuesday? Am I saying it's going to happen next week or in 10 days? No, but it's giving us an indicator that there's a lot of pressure on the common indicators that historically have shown us that this is where the market tends to turn. Percent of new stocks, 52-week high, 52-week low. Yeah, that's at the bottom, isn't it? That doesn't tend to go much lower than -15 or -20, but it's getting there. VIX isn't as high as I thought it would be, but we're going pretty high there, 28.85. Trin, of course, there as well. RSI, SPX, it's at 16. The RSI of SPY and SPX is at 16. And I know a lot of you use RSI for the 80 upper indicator and the 20 lower indicator. We're at 16 right now. So why does it have to go back up? It doesn't have to go back up, but the pressure is there for what you normally see on an RSI below 30 to move back up. And okay, so the percentage of stocks over the SMA 100, let's take a look. 32. All right, so only 15 are above their 20-day moving average, 32%, double, are still above their 100-day. So that actually hasn't entered into the bullish indicator yet. It will when it drops below 25. So it's getting close, but it's not into bullish territory yet. And the MACD gap, of course, got a -30 MACD gap on SPX, which you see it rarely tends to continue that historically. Usually has to go back towards this range. And how does it get back to a more positive MACD? SPX has to move back up. So that's where the very bullish buy is triggered. Last time, of course, we saw the very bullish buy. I don't think I could do it on this account, but I'm going to try. And you saw some light buys in there. There's some sell warnings. Sorry for the scrolling, folks. Let me go back as far. I did. I can. Great. Just went too far. You know where I want to go. Let's see. There it is. Last very bullish buy started to trigger as the market was pushing down, starting on February 9th, the deep green, very bullish buy. I went back to a bullish buy. You know, we're steeply declining here. 2020, March of 2020, we know what was going on, of course. We don't like to talk about it. But we had some up, then some down, then some big down, then some big up, and then some big down. 200-point days, 300-point days, up and down, up and down. Very bullish buys. Triggered all the way through, and then finally on the 20th, 11 days later from the first bullish one, that was where the bottom was hit at 23.04. I'm sorry, the 23rd, 22.37. My apologies. So the 23rd. It was the 26th when Ernie started going back in and buying leaps out to to January 2021. At that time, he's buying stuff on Disney, Home Depot. I was doing Johnson & Johnson, Kraft, a couple of the banks, Bank of America. No, I did JP Morgan. Ernie did Bank of America, but Ernie did it properly. He did it here when he saw the bullish buys go to a light buy. That's when he started going into those. I waited until here. I think it was in April 8th or April 7th when I started going once the SPX went above its 20-day moving average. But as you can see, that's the last time a very bullish buy was triggered. The deepest one, 3.9 and 3.11. So roughly 10 to 9 days later is when the bottom was hit. Okay, I'm sorry. 12 days later, roughly, is when that was hit, 14 days later. So I'm not saying it's going to happen tomorrow, but this was a weird flux, wasn't it? We knew it was going on, but each day wasn't just straight down. We're going 200, 300 points up, 300 points down, 200 points up, 100 points down, even 100 points down. There are another 70 points down. And then suddenly 220 points up, 200 points up, 100 down. You know, that's what the jumps we started to see in that case. That was a very rough March to get through. In any case, that's where we are right now. That's why the very bullish indicator came up. For those of you, again, as I mentioned in the Fusion subscription at Radioactive Trading, I said I was going to open a trade, but I was actually waiting to see this go into a more bullish mode So likely on Monday, I'm going to open a new Mary put. It could possibly be Tuesday, but definitely probably one or two trades are going to be open in the Fusion portfolio next week after we adjusted Barry, closed Ally, adjusted Barry, and maybe manage ESI. I haven't decided yet in that case. All right, so that's the market sentiment tool triggering to a very bullish buy. No bearish indicators right now with the pressure that's been on the market and the push down. 5 are still at neutral, but 8 have gone into their bullish mode that we've seen historically. They tend not to go below those other levels. Usually forcing the outside pushes them back up, which usually means the market's going up. And historically, that's what we've seen. Again, not saying it's going to happen in 1 or 2 days. Could be 10 days, could be 11 days, could be 14 days. But it's giving us the indicator that historically, when we see these, pushback usually happens to go in the other direction. That's why the very bullish buy is triggered.